Good evening, fam. Here we go. If you don't like my music, you won't like my TA. Just get the fuck out of here right now. I'm just gonna tell you right now, I heard some comments on my music. Get the fuck out of here. Yo, what up, fam? Thank you for listening to my intro song. You know what? Look, it comes down to this, fam. It comes as simple as this. You know what? My style, my approach, my music, my opinions, my energy, they're all the same. They're all the same. That's what makes me me. That's what makes my system me. All right? It's not going to change. I'm not going to change. Period. I won't change. You may think I'm fucking crazy. Good. I hope you think I'm fucking crazy, because you know what? It takes to be crazy to be able to trade this market, to be able to understand this market, to be able to see what this market is going to give us over the next 3 months, 6 months, and a year. This is not up only times. You cannot just go ahead and start a new Robinhood account today, fam, and then go ahead and buy whatever the fuck stock you want to buy and make a lot of money over the next 5 years. Sorry, those days are gone. I warned you over a year ago those days were coming to an end. And I will continue to warn you now. It's gonna get worse before it gets better. Now, that does not change my day-to-day opinion. I may be bullish tomorrow from what I see. I may be bearish on Monday next week, because that's how I trade these markets. You need to understand, I am a macro player on the spot position. On a buying equities position, I'm a macro player. On an accumulation position, I'm a macro player. As a seller of stock or crypto closer to the top, I'm a macro player. On a day-to-day I trade. It's not going to change, fam. You have to understand. I wrote this on the first day of the year. January is bullish. Well, guess what? The yearly open, all right? Because we're looking at the 5-day here. We're going to go over here to the fancy 10-day, which, of course, is not showing. It's glitching out. Don't just ignore that 10-day. Here's the 10-day because we are on January 10th. This will show us right where that yearly open is. On this day of the yearly open, on January 1st, I said January was bullish. I did say that. I bought longs. I bought more spot. Why? Because that's what happens. That's what happens on the news cycle of a 6 month. That's what happens That's what happens in a 6 month candle. The first month of a 6 month candle and a bear cycle, we always start bullish. Okay, here we are now. Here we are, January, on a new 6 month candle. Okay. And we are right back there. Here we are in July 2018. Okay, July is the first month of a 6 month candle, and so is January. Doesn't matter what year it is, July will always be the first month in the 6 month candle, and January will always be the first month in the 6 month candle. Only 2 6 month candles make up a year, okay? And I'm talking in a macro sense right now. We're going to get rid of these EMAs and MAs. We'll get down to that in a second. Those don't mean anything to this point. The point is, we call this a dead cat bounce on a 6 month candle. Okay, we are in a downtrend. We're in a clear downtrend here. New 6-month candle. We're going to print that first month bullish. Hence why I said January was bullish at 16.5. We've come all the way an 8% move up to 17.4. 6 to 8%, whatever you want to calculate it as. But the fact is, the macro picture is still bearish. That's what you need to understand. Okay? I'm not going to draw the fractal. We went over this yesterday. Okay? But if in a sense of something like this to this to, you know, probably in my sense more like this, you know, to this. God. Something like that. It's not going to be like that. Unfortunately, it won't be completely flat. We won't go straight down right here. New 6-month candle. First month bullish. New 6-month candle, first month bullish. Now let's get down to the nitty gritty, because this is just a monthly candle chart we're looking at here. This means nothing to today. If I'm going to stream tomorrow and the next day and the next day and the next day, or the next week or the next week after that, none of this monthly matters to maybe how you'll trade. But you know what? 90% of you shouldn't trade this year. And I'm going to make that very, very clear. If I told you right now that as we're looking at this monthly candle, if I told you right now that we were going to have this exact, you know, very similar situation right here, would you want to trade the next 3 to 4 months? Oh, what are you talking about, Savage? Well, I'll show you. Bam. Do you want to trade this? Do you really want to trade this, fam? No. In fact, I would argue you want to accumulate this. All right? Right now, what we're talking about in type of a price range type of play, right? Top to bottom, you know, we'll just say like the mid zone right there. It's about 63%. No one that accumulated at 6K and accumulated more at 3K in a type of accumulation strategy. That's what we're talking about. We're not talking about trading. No one that accumulated here, and that actually held on to their position. So we'll say their average entry, if you had like a DCA entry here, this is about 3 months. This is about 3 months, right? 6 months here. We'll go over the 6 months here from here. About there, right? 26 bars. 182 days is about 6 months in a yearly candle. So we got 182 days, right? Right here, if you accumulate, like I said, no one is unhappy about this accumulation right here. Right? You're gonna say in a general sense, if we're accumulating right here, fam, our average buy position is here. Now, unless you got the weakest, sweatiest hands in of all time, you didn't sell here. You didn't capitulate on like 2 weeks below your buy price. You already spent some time down here at some point back in 2018 underwater because you bought here. That's where I think we are now. This is where I think we are now. Okay? You bought here. You bought more here. This is called an accumulation strategy. A dollar cost average strategy is not what it's called. A dollar cost average strategy, fam, means you're buying the same amount on the same time interval. The problem is this can be a dollar cost average strategy. I do suggest you making a dollar cost strategy, but a dollar cost averaging strategy. But the reality is that a dollar cost averaging strategy means you buy the same interval in the entire market, blah, blah, blah. I have not bought spot above 40K. I have not. I have it on the record. I have not bought spot above 40K. I bought a small spot position at 40K when selling most of my spot position at 46K. I spot some spot at 40K and got out a break even before the drop down. I have no problem admitting that. I haven't since then. I have not bought spot until below 20K. If you can imagine in a Bitcoin right now, I'm in average spot position of about 17.3. I continue to add to my position. Okay, not 17.3. Yeah, 17.3. So right around here. Okay, you can imagine I started buying my spot position really heavily around here and here. I had to continue to buy in this spot strategy for Bitcoin because I do think I'm not a Bitcoin maxi, but I do think Bitcoin will one day see the glorious days of heaven and we will break an all-time high. I'm not going to get into the all-time high story. Who gives a fuck about that? The price is set. Bitcoin is 17K. Even if Bitcoin went to 35K, that's halfway to the all-time high. That's still making a significant amount of money. We've doubled our money in a very bad market. Now realize this is a high-risk asset. It's a very volatile asset. When things start to change in this market, instead of being like this, the S&P, which I expect to be over the next 10 years, okay? Instead of being like this, sorry, Dow Jones. Let me put the Dow Jones. Excuse me, I'm sorry. 70s. Instead of being like this, for example, this is what traditional markets are coming in for. Unfortunately, this is if you can imagine anything like this over the next 15, 20 years, this is a horrible market to be in if you are retired. Okay? Horrible market. If you're young, this is a great opportunity. Okay, you see that? Look at that. Perfect TA right there. All right, this is a trend analysis. This is perfect TA, fam. I'm gonna tell you right now. Like, you could just see it right here. Right? Support, a little deviation of lows. This was and then we see this accumulation. This is a kind of a wick off accumulation strategy right here. We're seeing, and this is over months in the Dow Jones. This is the 70s. This is Vietnam War. You can imagine like this is probably max pain for the legacy markets. But like I said, we come over here to a more high risk asset, and this bad boy likes to pop off things like this. It likes to pop off some. Just happened. A 350% move. 3.5% of your returns. Now let's say it's the shittiest economy ever over the next 5 years. And let's say we don't even see closer to 350% lower high, macro lower high here. That's very possible, right, fam? All right, let's say like the lows are, I do think the lows are around here, okay? We'll get in that to a second. But let's just say we see some type of from here $200 move, 2x, right? Let's say the 2x is down here. Oh, that would make sense, Savage. In fact, that would not just make sense, but here we are, we're filling that volume gap right there, right? We've tapped the lows right there at 10.8 of support. You can see how clean that is right there. But let's just say this is what happens. The point I'm making is you could make the most money in crypto. This could be your difference maker. This could be your difference maker into your retirement in 20 years. Crypto. If legacy markets were to see something like this, that's bad, fam. That's bad. Okay? Anybody that depended on the retirement and depended on gains in the market. Now realize the S&P has given us 20% returns in 2021. Over 20% returns in 2021. In 2022, it gave it all back. It gave it all back, fam. And the reason I'm talking about the S&P compared to crypto is because this shit matters, fam. I hate to say it, like it gave it didn't, I mean, I guess it didn't give it all back. It really didn't. It didn't give it all back. But I'll tell you what it did do. It gave the most bearish candle it has in a decade. Here's the S&P chart, right? $10-year. I mean, it's the most bearish candle we've seen since 2008. Whatever you want to say about it. Like, we'll use common sense here. It's the most bearish candle you've seen since 2008. And if we have a flat market and you want to make a little bit money in the market, you want to accumulate crypto. Probably a little bit more than you would accumulate your normal stocks. Because stocks, you'll have a long time to accumulate. Crypto's going to see much heavier gains. When the S&P and Dow Jones and NASDAQ gain 15%, crypto's going to gain like 20%. It's going to be bigger gains, fam. If you were an aggressive portfolio, right before the market turned, right before the market got sour, if you were an aggressive portfolio and you moved it to a conservative portfolio, right, during the downward, you're like, oh man, like let's say you're in this aggressive portfolio in 2021, December 2021, right? Here you are, right here. You're in this aggressive portfolio, fam. Aggressive portfolio. Right here on this candle. Then we go, nice. Nice gains. But let's say you're in an aggressive portfolio here. And at some point, you switch your portfolio to be a little bit more conservative. You start buying some utility stocks. You start buying some more Bitcoin and Ethereum because that's kind of more the more conservative assets, fam, in crypto, right? It's Bitcoin and Ethereum. It's not going to be the shit coins, fam. And then the market starts to go up. You know what happens, fam? You're not going to make this all back. Because what happens, you were aggressive, and then you decide to go conservative, but conservative is not going to go up as aggressively in an up market as the aggressive portfolio. Right? Do you understand that? So if you're going to be aggressive now, you might as well just be aggressive through the whole thing. It's too late to change from aggressive to moderate portfolio, in my opinion. If you change it to a moderate portfolio to try to like avoid the downside, sure, it'll be maybe more bond side, maybe it'll be more Bitcoin Ethereum side, but Bitcoin Ethereum may not move much compared to altcoins or other more speculative assets in the market. Tesla is one. Okay, Tesla's a speculative asset. I don't think people realize that Ford Motor Company went to $1 a share in 2008. Okay, Ford Motor Company. In fact, the SAV's going to start a new chart. All right? It's important. It's important. Start a new chart. I think people need to realize here kind of consequences we're going to see in this market. Now, this is a traditional vehicle company, all right? As you can see here, it's Ford. Ford's been around since the 50s, the 40s, the 30s. Been around since forever. 2008, Ford went to $1 a share, fam. $1 a share. In fact, if you used technical analysis, see, that was a great buying opportunity right here. Great buying opportunity. All the way back to shit, man. You're buying Ford in 2008 at the same price people were buying it at 1974. In 2008, you could have bought Ford Motor Company, which is still the leading seller of vehicles to the United States Police Department? I don't know, that's not armed forces. Police Department. Police Department. Most police department vehicles are Ford. Have some type of Ford contract. Might be Chevy. Doesn't matter. The point I'm making is no one at Ford at $33 thought it was going to go to $1. Okay? So let's just talk about that downside right there. Okay. 96%. Now, realize this, fam. This company has assets and liabilities, and it's made of real things. It has employees. Okay? This is a real company. An American motor vehicle company that's been around since the 20s went down 97%, fam, in 2008. Now, why am I talking about this? This is very important. Why am I talking about this? I'm going to go over here. All right? I'm going to go over here to the monthly. We're going to look at the monthly chart. This capitulation right here. We can just see, we drew a little box here. This is a great support area right here. Of course, there's a generational buy opportunity. Why was it a generational buy opportunity in Ford Motor Company? Because you can just see how the support was here, right? Support here, resistance here. This is the monthly chart. This is a significant chart. This is all the way back to the 70s and 80s. And here we go. You hit that. So when you're right here, when you're here, and we're seeing this major capitulation event, kind of what may happen in the future now. And you're seeing this major capitulation event. You're like, where are we gonna bounce? Well, fuck, man. You gotta go back in history. That's where we'll probably bounce, right? You can just see it right there. So then we go to something like Tesla. Now, Tesla, I'm a big fan of. Tesla's great. I've been shilling this bearish chart. In fact, since August, September. I was the first person on crypto Twitter to short Apple at 174 strike price. Now imagine this. I could get options super cheap at a strike price of $174 on puts when the price of Apple was 172. No, sorry. I got strike price of 172 when the price of Apple was 174. So I paid less for my premiums on my options because Apple was $175 a share. I bought it at strike price of 172. Okay? For the record, I was probably the only person on fucking Twitter publicly showing these trades. I showed it on my TD Ameritrade. I showed the puts right there on the chart. Forgot, I literally showed the expiration. I had to spell it out for people. Okay? If you don't know what the fuck I'm talking about, well, let's pull it up. Let's pull it up. Pull it up, because I'm not, this is not about clout. This is the point of reputation, fam. Reputation. This is real deal money field. Look, we're not, you like that real deal money field? If you don't know that, that's from like Real Deal Holyfield, okay? Evander Holyfield fought Mike Tyson. You know, it's probably out of most of your ages. Just joking. But listen, all right, fam. Is we're gonna have it? Probably not gonna have it. Doesn't have it, does it? Hold on. Give me a second. I have it somewhere. I know I do. I do. Regardless. I have it somewhere. I have it somewhere. Give me a second. Give me a second. What's up, babe? All right, can you wait? Thanks, babe. Yo, fam, this was the tweet. You know, I don't give a fuck about Jackass either. I'm gonna make that very clear. I never saw one apology to his community when he showed bullish August and we never reached fucking 28K. Where was the apology, fam? Apple is 5% from all-time high. I was taking my fucking put for September 16th. Put $173, $40, $340 an option, fam. We were in the money. Fuck, man. We were in the money before the end of September at 163. These guys are so sensitive. That's what it comes down to. I had to pull this one up. This is the only one I could find. I had to shit on this motherfucker. You know, did anybody see an apology from these people that showed bullish August? Where is our apology? Not a single apology, fam. That's what it comes down to. Again, who's the fucking master at this shit? Who fucking called the put of a lifetime on Apple this year? It wasn't Jackass shilling the fucking all-time high 5%. I'll tell you that, motherfuckers. God damn! It upsets me. This is the type of shit I gotta deal with every day. I'm out here trying to fucking prove the truth. I mean, this guy was shilling, god damn, dude, he was shilling fucking Apple at this, fam. Are we serious, dude? Look at that stochastic. What are we talking about? What are we talking about, fam? We're talking about clowns. That's what we're talking about. It's a fucking crypto circus. That's what it is. It's crypto fucking circus. Yeah, I was the one shorting the #1 asset in the world, fam. Nut on that shit, dude. I'm just sick of it, dude. I'm just sick of it. Apple is 5% from all-time high. Oh my god, fam! 5% from all-time high! Oh my god! Oh my god! Like, what a fucking clown, dude. What a fucking clown. What a fucking clown, dude. Get the fuck out of here, dude. All these motherfuckers are clowns. I'll fucking call every single one of them out. You don't like my opinion? Get the fuck out of my chat. You ain't welcome here anyways, dude. I'm sorry if I am screaming. Some of you I've been here for a long time. You know why you're here. And some of you are new. And you have no clue the shit these guys have been throwing in your face has been straight out of their ass. It's so sad and pathetic, man. It upsets me. I'm in the business. I'm in the honest living business. That's my business. And let me just tell you something right now, fam. Finance is very far from an honest living business. You're seeing people like Sam FTX, that's literally the equivalent of Bernie Madoff in 2008. 15 years ago, fam, we saw the biggest Ponzi of our life. How are you gonna tell me that this kid, Sam SBF, didn't take your money from the first person and then give it to the next person? That's called a Ponzi, fam. He took it from you. He took his money and he bought Robinhood stock. He took your money and he supported Democrats. He took your money and he supported Republicans, fam. He took your money, he supported the war in Ukraine. He took your money, he supported hunger. That's a Ponzi. It's no different than what Bernie Madoff did. This is the biggest fraud we've ever seen. This guy should not spend a single day out of prison. Okay? Just like some of these guys who are shilling projects, who delete their tweets, who are shilling rug pulls, should be in prison. Okay? Let me just tell you something, fam. People like fucking Canner Clark, he came from a fucking he's a trust fund kid. He's a trust fund kid. He has plenty of money to spend. He didn't earn any of his money. None of it. I could absolutely destroy that person right now if I wanted to. But I'm not going to. But I'll tell you, he's a fraud. He didn't earn any of his money. And not just that, he's rug pulled. He's literally shilled projects, buy-sell projects, and then he deleted the tweets. That's called rug pulling. Period, dude. Period. I'm not fucking afraid of the dark. I'll never be afraid of the dark. Ever. But you know what the worst? Look, we're gonna get through this. There's a generational buy opportunity right here. Generational buy opportunity for Tesla. Okay? Generational buy opportunity for Tesla. Right here. Okay? Oh, Savage. Tesla's not going to 20, 30, 25 to $33 a share. No way. Once again, example one, Ford. How many people here? Okay, hold on. Let's just add it up. This will be fun. Normal math. Okay, where are we in Tesla, fam? By the way, I called this short right here. I got tweets all over fucking Twitter. I said monthly. I think this is actually a quarterly, month and Head and Shoulders. Look at this quarterly Head and Shoulders, fam. This is a typical Head and Shoulders. I called it back in September. Regardless, I even warned Elon about it. He didn't give a fuck. He knew it was coming. But look, all right, like. I didn't warn you, fam. No, Martin. Look right here. This is it. I don't know about the margin call. I'm not really worried. I don't give a fuck. Dude, fam. Dude, the guy's got $1 trillion rockets, dude. trillion-dollar rockets. He's not gonna get margin called. Period, dude. The guy's the fucking richest man in the world. He doesn't give. Dude, the guy's the richest, smartest man in the world. I'm not happy about his take in Twitter. His stake in Twitter. His take. I'm not happy about him spending his energy on Twitter. That's just such a waste of energy for like probably the most innovative man that in my lifetime. It's such a waste of energy to spend his time and money on a social media company. Regardless, he'll figure it out. But this is what's gonna happen to Tesla. If this is what happens to Tesla, it's gonna happen to BNB. Okay, right? Like look over here to BNB. Like, whoa, you're comparing BNB? Oh, yeah, I actually am comparing BNB to Tesla because this is what's gonna happen. Like this is the reset, fam. This is the financial reset. Now we can distribute here all day, right? Let's look at the volatility in BNB, but we can distribute here all day. It's still bearish. No volatility on the B. Hey, by the way, you guys, fam. Well, let you know, I decided to send. Forget it. Forget it. Forget it. Forget that. Forget that. All right, look. Low volatility right now. So again, fam, BNB, right, looks very similar to Tesla. Has got this huge volume gap. Tesla going down, fam. It is. It's been overpriced for a long time, in my opinion. You can see the volatility right here, right? So look at this. Watch this. Weekly. Oh. Dead candle. Damn, dude, it's just getting out of control. But I do think this is like generational buy opportunities right here. We're gonna be seeing. It's gonna take us a long time to go down. I'll continue to update this market, but I think unfortunately we are headed for a sideways market for the next 5-10 years on traditional markets. But as far as like high risk assets go, things like Bitcoin and Ethereum, even Solana, I'm a big fan of Solana, fam. I will always be a big fan of Solana. Oh my God, we all sold at the bottom. Not me. In fact, I have not sold my Solana that I bought at an average price of just a hair under 30K. This is where my average buy is. I will not. I have nothing to. There's no hide or shame in this. If any of you guys bought here with me at this support level, okay. I'm not gonna argue. I'm like right here. That's actually right where I'm at, 29.50. So I'm up here. This is where if any of you guys bought this, right, and you bought it with me, none of us could predict the FTX collapse. I wasn't predicting that. No one could predict it. Of course, it's like anything else. It was the trigger to the market collapse, the things that I saw happening. But the reality is that Solana is not going anywhere. I don't know if the Google thing is true where they're buying Solana. I will say this though, like I'm not gonna setting this. This is the worst part about Solana right now. I'm not gonna sell because it's just a spot position that cannot get liquidated unless it went to zero, which it's not gonna happen. It's not gonna go to $0. It could go to 1 cent, and I'm down 99.9%. What? I'll take that shit. But we have an extremely bearish candle right now on Solana. So yeah, like we're probably gonna spend some time accumulating. And some type of accumulation would look like this over a long term, which I think we'll see. And we'll see that kind of like wick off dip and then pop. Now, something like Solana, unlike a Bitcoin Ethereum, which will see some type of good bounce, Solana could go all the way. What I mean by all the way is you can imagine a move to We'll say $78 here. And again, like I said, we're going to see at least accumulation. So we'll just say like the best low we can catch on Solana is like $10. We'll just keep this a very simple mathematical equation. $10, right? The move up there on a spot position. It's following me here. It's about 7 times your money. Six times your money. So being in a conservative move on Solana, although this is what I'm thinking will happen. Imagine you get this type of accumulation here, and I will continue to accumulate. That's how you dollar cost average is going to lower Savage's price over time. If I continue to buy over here the next year, this yellow line will slowly come down. This is dollar cost averaging. Maybe I won't get that low. Maybe I'll still be there at dollar cost average position above $20. But if I am still in a dollar cost average position above $20, I'll be much happier if I was at $21 than $29, which is where I'm at now. But like I said, I'll continue dollar cost average. And let's say I dollar cost average and this accumulation, this type of down market happens for much longer than this. Regardless, I will be looking for a type of 6-7x move on my spot if I was able to DCA this position down to the lows. Now, let's say you're not a Solana buyer and you start to buy your Solana position now at these prices, and you got an average position of like $13, $15. We're talking about a good 5x, fam. So even though we could see these mute traditional legacy markets going on over the next 10, 15 years, what does that mean? S&P touches 4,700, maybe 5,000 again, and goes right back down to 4,000, 3,600. Like it's no one business over 10 years. Up and down. If you can imagine S&P being in a range for 10 years, barely making a new high of 5,000, not really making a new low. Maybe it does make a new low. The best plays, the best things to accumulate at the lows will be the higher risk assets. Things like Solana, things like Tesla when it gets there. Now you got to realize that traditional markets have not bottomed, but I do think it is time to start accumulating the higher risk assets like crypto. Now, Solana, I would not buy here at $16. As I just told you, there's a huge bear sell candle on Solana this weekly. But I will start to accumulate, to start to DCA more, because this is not really a DCA strategy to me. I know where to start buying. I will start buying a little bit lower. We start seeing a dip down to $13. I'll start buying more Solana. I'll accumulate heavy, trying to drop Savage's overall DCA position, which is around, I am just sub 30, fam. It's embarrassing. It's probably my worst buy since Bitcoin Cash in 2017. And now in 2017, I didn't know shit about these markets. So right here is my buy. I will continue to buy on this next dip. Now, I was buying here. Okay, watch this, fam. All right, originally my position, I have no problem saying this. My position started at 33.50, around there. Okay, I bought this. Gotta figure this shit out. I bought this. Heavily DCA'd here. Right, get that? Bring in my position, because I was like, fuck, man. We had the SBF collapse right here. Right? No one could predict that. And I woke up one day, I was like, fuck, dude. It was really, I woke up right here, fuck. And I didn't start DCing right here. I'm not gonna lie. I may have bought a little bit above $20 at the low 20s. Not much, I'm not gonna lie. I mostly DCA back down here, which eventually lowered my position to just under $30. Now this is my position right here. Nothing fancy, nothing to be proud of. This is my position. Now, if we continue to DCA at some lows here, and like I said, anything below $10, Solana is a buy. Period. Solana is going to be a top 5 coin. I will say this on the record, Solana will be more valuable than BNB shitcoin, which is worthless in 2 years. Solana will be more valuable, market cap total, than BNB in 2 years. Probably one of the best calls I could say. And as I accumulate down here, my DCA position will get lower and lower and lower and lower. Right? Because eventually we will have this move up to here. And wherever that DCA position is, I will sell because that's what a trader does. Maybe I can get that 250% out of it right here. Wouldn't that be amazing? Now imagine there is no loss of position there's like very minimal risk to losing your principal here on a spot position buy trade type of situation. There's like very minimal loss principal because we're not using leverage and we're building a spot position. But we're talking about 5-6xing your money. 5-6xing your money is a move to $70-$80 on Solana. Let's just put this in perspective, fam. This right here, fam, is where Scott Melker said it was a generational buy for Solana at $80. I'm not asking for much. I'm not saying Solana has to go to $200, even $150. $70. That's all we're looking for. Nice and booted $70. So mad love, appreciate all you. I'm gonna go. I love y'all. I'll be on tomorrow. Get the point. Mad love, appreciate all you. Hit that follow if you haven't hit that follow. I'll be on tomorrow night. Don't you worry.